So we know now a little over a week ago, the Federal Reserve decided to raise the Fed fund rates. That means that mortgage rates are going through the roof, right? Not necessarily. The Fed doesn't actually set interest rates for your mortgage payments. Well, how does it all work? Stick around, we're going to get into that today. Hello, Central Maine. Welcome back to the channel. It is your realtor, Nick Isgro with eXp Realty. And as I just stated at the beginning, today I'm going to do a quick video just to break down the relationship between the Federal Reserve changing the Fed funds rates and how that may or may not affect mortgage interest rates, because the two are definitely not directly linked. Now, before I get into that, I do want to welcome you here to the channel. If you've never been here before, do me a favor, go ahead and like this video, hit subscribe, knock that little alarm bell. You'll be notified every time I put out new content. Now, so the Federal Reserve does not directly set mortgage payments. So how is it then that when the Fed makes announcements, everybody in the mortgage and home industry seems to be going berserk? The TV channels and the newspapers are all talking about rising interest rates and how that may or may not affect your mortgage. How does this all work? Well, let's first break down what is the Fed funds rate, because it's not the rate of your mortgage. The Federal Reserve Fed fund rate is the rate that is prescribed for big banks to lend to each other overnight. That's right, overnight. So when banks like your local community bank even close the end of their business day, typically they're going to go to a much larger bank like the Federal Home Loan Bank of Boston if you're here in New England, or some other large bank, maybe it's Bank of America or some other big national bank, and they're going to borrow typically, tens of millions of dollars sometimes in order to cover their entirety of positions for the day. Because what will happen is the next day in the morning, as loan payments and other things came in overnight, the bank's position will have changed and they will then send money out to pay that money back. So this is a very short-term rate. This is not a 30-year fixed rate mortgage. This is legitimately an overnight borrowing rate. So what happens when the Fed says something like, oh, we're going to raise the Fed fund rate by 0.75? What does that really mean? Does that mean your mortgage rates automatically change? No. Well, if the Fed isn't directly setting mortgage rates, how does this all work? Well, it works in a few ways. One, we have to remember that everything the Federal Reserve says or does affects the entire monetary system. Like if the Fed comes out and says they're going to continue quantitative easing, that's just buying millions and billions of dollars of mortgage-backed securities in the market, or if they say they're going to wean off that and let some of these debts go back into the market, that's going to create either some certainty or uncertainty in the market. There is an entire market, actually, in fact, called the Fed Funds Futures Market that is entirely dedicated to determining and predicting what the Fed is going to do in the future. And in fact, this market of securities has been almost 100% accurate, because if you think about it, the Fed is very transparent typically over the last bunch of years before they come out with a change. You might have 7 out of 7 Fed spokespeople come out before a meeting and say that they're going to raise the rates by, X amount, 0.75 this last one. Well, what happens is, the Fed only meets 8 times a year. Well, the market doesn't wait until they meet. So if the Fed funds futures market, which accurately predicts these changes, is basing their changes on statements made by Fed spokespeople, and these changes are getting cooked into the marketplace far in advance of when the Fed board actually meets to implement the change, most of the time, that change that is going to be happening that day has already been cooked in through the entire financial markets before the decision was ever actually made. That's why oftentimes you might even see on the day that the Fed announces an interest rate hike, you might see mortgage rates at your local bank do the exact opposite. It's not all working in tandem with these 8 meetings. These 8 meetings are spoken about and talked about long before they actually happen. Investors in the marketplace are putting these predicted interest rates into the marketplace advance of what's happening. So there's not a direct link between what's happening when the Fed makes these calls and what's happening at your local bank when it comes to the mortgage rates right there. So that's a quick breakdown of why these two things are not directly linked, although they are linked indirectly, as the rate changes always make their way through the financial markets. Because if you think about it, if your local bank is borrowing at a higher rate every day, they're paying higher interest on those tens of millions of dollars that they're borrowing to get themselves through the Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, Monday. Whew, that was a mouthful. But seriously, if they're borrowing that much every day and their interest rates are going up, they're going to eventually have to start charging more or squeeze their profits. In the meantime, the Fed funds futures market is already been making these predictions of what's going to happen. Those markets have influence on other financial markets and other financial instruments, and so the interest rate changes have made their way through before the meetings actually take place. So that is the down and dirty of how the Federal Reserve changing their Fed funds rates makes it through an entire financial system to your mortgage rate, whether it happens before or after the Fed actually meets to make that decision. Because as we just discussed, most of the time that's already going to be baked into the cake prior to them even meeting. I hope you found that helpful. As always, we do try to provide on this channel relevant information to you so that you can be the best equipped buyer or seller in the marketplace. Now, if you are in the market to buy and sell a home and you're looking for a real estate professional to work with or maybe just have a chat with about what's going on in your specific situation, feel free to reach out. All of my contact information is linked in the post below. As always, I appreciate each and every one of you sticking around to the end of this video, and until the next one, I'll see you next time.